This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Patrides. Thanks for joining us at XM.com. Global markets continue to be driven almost entirely by moves in bond yields. The week started with Wall Street panicking about rising yields, but the hysteria soon faded and euphoria made a stunning comeback yesterday as yields cooled down. The Nasdaq 100 led the charge higher, soaring by 4% as most tech stories with inflated valuations came back in fashion, the tip of the spear being Tesla, which gained nearly 20%. In the FX theater, the retreat in yields translated into a softer US dollar, which in turn lifted all other major currencies. The Australian dollar was the biggest beneficiary. The euphoric mood even managed to lift gold, which has taken a real beating lately. At its heart, all this comes back to a stronger economic outlook in America, forcing investors to bring forward the timeline of rate increases by the Fed. That's what ignited all this volatility. Since the Fed hasn't pushed back against this, whether yields continue to rise will likely depend on incoming economic data and vaccination news. As such, today's events could decide whether panic returns or whether calmer tones are here to stay. U.S. CPI data for February are expected to show a meaningful rebound in the headline inflation rate, but the core rate is expected to have held flat at 1.4% in yearly terms. The other crucial variable will be an auction of 10-year U.S. Treasuries at 1600 GMT. Markets will focus on demand. The Bank of Canada will have a tough balancing act on its hands when it concludes its policy meeting today. The Canadian economy has performed well lately despite the lockdowns, recovering faster than policymakers expected. The problem is that Canadian yields have been caught in the global rally too, with the 10-year doubling this year. Hence, if policymakers sound too optimistic today, yields could surge even higher, threatening to dampen the recovery as borrowing costs rise further. Markets are already pricing in a 20% chance for a rate hike this year. The Bank of Canada won't be comfortable with that, so it might try to hammer home the message that rates will not rise for a long time. If it succeeds, the loonie could take a hit. This is today's Daily Market Comment. Thanks for joining us at XM.com.